Hello and welcome, as it is the third day of November 2018. This is the Money Charts channel and a silver technical analysis video. Multiple time frames, a lot of time frames within this video. The daily, the weekly, the monthly, the quarterly, the yearly, and even some short-term ones as well. All trades, bets, and of the like within one's own risk reward. And before getting into the charts, when I look at things like physical silver, it's a no-brainer for the confidence that I would have to realize, okay, 20 years, even 10 years will go by, and you have silver. How confident are you going to be with that investment class from this point on to then? And I'm extremely confident with silver. I'm also confident with gold. But I don't want to use that adjective extremely for gold. I'm just confident with gold. But I really can't say anything with anything else. For gold and silver do not have an expiry date. And if I'm talking stuff that's 10, 20 years down, even if it has a 50 or 100-year expiry date, that's fine. Oil, it doesn't have an expiry date, but where are you going to store thousands of gallons of it? Yeah, that's, to me, gold and silver is the only one. As far as cryptocurrencies, maybe they'll work. It's either going to be huge losses or huge gains from this point on to that point forward. There really isn't anything else. It's not going to be, oh, your buying power stayed about the same. There's going to be none of that with cryptos. And then fiat currencies, US dollar, Australian dollar, Canadian dollar, yen, the euro, all that type of stuff. I have no confidence in such an event. That really, silver is the only thing that I can really firmly be confident, where I could take like a time machine, or just, if I was in a coma for 10 or 20 years, to be confident that's what I have and I can turn it into whatever the form of money happens to be at that time. Okay, on to the charts, starting off within the daily term, which has been in a decline, has obviously been falling, yada, 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 has been going sideways ever since. It has established some resistance at the high $14 mark. It has established support at about $14.22, and again even lower. But this move, since it started to leave this 18 average to the upside, since this breakout low, 14 1/5 has been the key part of this range. It's been very choppy over the last several years. We're going to see that. But interesting to have a spot where you just get to the upper end of this range, like in one day, as it did. This quick little selling as it was leaving the 18 average. Overall, the market's looking very concerning, and I'd rather be a seller than a buyer for a short-term move at this point. And yet it has its down move, and then down she goes, or up she goes. The session on Friday held the Thursday move, but it's got to get above this level of resistance. The 61.8% level from this high and this low happens to be about 16. It also is going to coincide with the previous level of previous support. We'll see that in a bit, but I want to go to short-term time frame first. 3 hours. This is the typical failed move, fast move situation, because if this selling was going to be a failed one, breaking down in this below here, then I would have expected at highest somewhere around here to be a level of resistance, or even around here, but it's went to previous high and has consolidated very, very nicely from that point. Let's take a look at this on a single hour time frame and how well it has corrected within this 18 average since leaving it. It left the 18 average after going sideways on November 1st, the start of the day, had its correctionary move, and then it's continued to do well. Let's go back to the daily again. So where do we stand from here? Obviously, if it's going to fall back down, the key support range is in the low 14s. And we'll look at where the lower numbers might be, looking at more longer term situations. But for now, again, breaking it, I'm going to be looking for 16 to be a key level of resistance. 3-day term time frame. There's more on the 16 as we can see how big of support it was. This was just chopping around for the most part beforehand. It had its fall and it's just been going correctionary ever since. On the weekly term time frame, we can see more for this just choppy up and down action, which is ideal for the trading strategy that I talk about, markets that move within this kind of mechanism. But throwing that part aside, we'll see how this plays out, because now that's made the statement move down. If it's going to move up, it's going to make at least its next move to 16. If it breaks down below here, we're going to see a leg lower within its correctionary move. And if it breaks down below, we're going to be talking about new legs lower. Where would we see that? Well, let's move to the monthly. And amongst this level in here, we'll look at this key support. We'll be talking about having a break below that. And key Fibonacci is around 10. That's the mathematical one from the $4 lows and these $50 highs. But within this time frame, what do we see in here? We see a spot where within the 2004 gain had some nice moves. Financial crisis 208. For myself, it was the summer of 2007 rather, where I was learning about trading. So right back when silver was coming back to this correctionary move. That's when I was learning about trading. Many weeks after that, I was learning about fiat currency, and oh my goodness, this world is kind of messed up kind of stuff. Silver's breaking out, starting to accumulate it, and then down it goes. All of a sudden, you have stuff like the Bear Stearns and Lehman Brothers and the failures that they had. Next thing you know, JP Morgan's in control of the silver market. They can pretty much move it as they wish, as I see it anyway. And now they've been accumulating the physical silver. So if you look at it from their point of view, if they have the option to choose where the price is and they want to buy it, would you rather buy it in the $14, $15, $16, $17 range, or rather buy it in the $30, $50, $100, or $400 range? Yeah, that's why I wouldn't be surprised if it does break this level of support and makes another leg lower, because they want to buy more. But if they want to buy it, why do they want to buy it? And then you ask yourself, would that be a good buy or a good sell if it goes down there? I'll leave it at that. Let's take a look next at the quarterly chart. With not much data, there's enough. Since this run higher, band flattened out, had a leg higher, its first one, which went to the $8 top, came back down to the 18. Showed a lot of strength amongst the 18 average of highs in here. Then it had leg number 2 higher, which went from $7 all the way up to 20. Had a little bit of correctionary move within it, but not anything big enough when it just found support at the 18 highs. And then this big correctionary move had a large pierce below the 18 lows, but it recovered it quickly. Then we've seen in here before the breakout, before the big 3 candles up, all of the 3 periods showing strength amongst the 18 highs, leg higher, and a good one. Obviously failing within the 18 average in this situation. And for the next time frame, which is the yearly, I'm going to have to use my spreadsheet and go to one of my old spreadsheets that I used to use. I put the data in here. It does some mathematical calculations for me. And then I just have one. So I even put on. It's not fit to the most perfect of scale. Makes sense because I haven't used this spreadsheet in a while, and it's on a different computer. But what I would do is make 2 spreadsheets and then just copy and paste one on here. And it used to be pretty close to being precise. But you can see up top it's not the best. I had upper and lower bands, but you know what? There's just too much on here. It made it hard to see this top areas. I just really thought that got in the way. I put the 18 average of highs, lows, and closes amongst such. Fibonacci, and I'm setting up the 23.6 and 38.2% down move from the 25-cent low to the highs in here. Now let's just think about this for a second as far as these numbers are concerned, because I got some statistics on here. I mean, it's been so long since I've done it. The last time I used this chart was in 2016 in the summer of such, so it's been a little over 2 years since I've used this. And that's when it was the 3-minute time frame for silver. Now it's not the 3-minute anymore. I can just type whatever in here. And now it's the silver yearly chart, although it's technically whatever in here. So therefore, statistics from the last 100 days, or periods, years, going back to the start of the 1920s, basically, this is up 1,358%. So less than 15 times it's up. So you talk about price manipulation and keeping it lower. It's up 15 times over the last 100 years. If the stock market was up 15 times over the last 100 years, we'd be talking about Dow Jones of about 3,000. Yeah. And from the lows, oh, it's up 5,792%. Okay, almost 60 times. Well, if the Dow Jones was up almost 60 times, well, its low was 52. That would be about 2,500 Dow. Okay. Anyway, that is the statistics on that point of view. Now, interesting when you look at the pattern from the lows of 1933, it managed to have its rally and hold it successfully, as we can see within the 18. Yes, it pierced below it, but it didn't hold. You could pretty much call this the failed breakdown near the end of the 1930s, start of the 1940s. It really didn't start trading until 1968. And then when it did, it came back down to the 18 lows, broke above it for the huge move, came back and has successfully, but with extreme volatility and extreme fight, corrected through the 18 average. Extreme volatility because of the big sizes, and extreme fight because, well, if it would have supported the 18 average of lows in here back in, say, 1987, 88 area, and then got above, we would have been talking about a bull market in like 1996, 1997. But no, it went down a leg lower, spent many years consolidating within the 18 average, and then it had a leg higher to get back 100% of what it lost, or close to 100%. And is now since corrected and is now stand within this newly rising 18 average. So at this point here, getting above an 18, when you have a move like this, big move higher, correctionary move down, full retracement back, successful correction down, and then leaving the correctionary phase. Seeing price action, I know you can't see the numbers in here, but the 18 average of highs right now is coming in at 23.14 and it's flat. It'll technically start to decline next year. Then getting above 25, 26, this thing is ready to go. Oh my goodness, because getting above the high is like so strong on this situation. Whenever you have a long correction that it has, which it did, and then you manage to get above it afterwards, breaking above 50, I'm going to be laughing at people that say, oh, silver can go to 160 or 200 or something. Really? That's all you're saying? Okay, whatever. And of course, if the 18 average starts to fail, then we're going to be talking about further correction down. Of course, the next key level that I got within the Fibonacci is in at $6 and change. $6.65, and even piercing below that 5. Who knows what JP Morgan and what the club is capable of doing? But you know what you got when you are holding the physical 9/9 silver. And that's what it comes down to. So, buying up here over 20, 30, 40, and then having a spot where you have to go through this correctionary move and even 20 or whatever amount of years, and then next thing you know, 3, 4, 5, 6, 800, 1,000, $1,400 silver. Okay. And I wouldn't be surprised in time that silver and even the stock market in general will successfully manifest its way through the blockchain. And it's really just going to be the Luigi to Mario, the sidekick to gold, because gold would make its way onto it, but it's going to have its bigger moves. You're going to see in the future, I think, gold making 10x moves where silver will be making 50, 60, 80, 100x or even greater style moves during that same given period of time. That's my prediction. I'm physically holding the commodity and hoping that I can get a lot more if the crypto game works out for me, because I like the strategy of selling when markets go high and buying when it goes low. So if crypto markets go high, trades become successful, I'm going to be wanting to sell Bitcoin. One of the things I would buy with such is that of physical silver. Because of the way cryptos have been moving the last few months, I have unfortunately not been able to buy any physical silver in the last 5 or so months. But in the 1 year before that, I was lucky enough to, or I was fortunate enough to be able to double my physical supply from the time I started crypto trading. And that meant several years of buying silver, because I bought silver on the year of this first red candle. That's when I first bought it. I bought it at silver was $21 or $21 Canadian. I bought 2 silver maples for $50. That was my first ever silver transaction in March of 2008. So I've been a silver holder now for 10.5 years. Thank you for tuning in and have yourself a great day. Bye-bye.